Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be the same intercompany accounting. We already completed two parts. We discussed about what is intercompany, what do you mean by transfer pricing, what are the important journal entries, everything, right? Now we are going to discuss about what do you mean by trading partner. How do we take the confirmation of balances and how do we do the settlements in the intercompany? These are the important three topics we cover today and we close this topic. Okay, I'm not going to put any more video on intercompany going forward. Okay, right. What do you mean by trading partner? I said previously, right? Let us say X Limited is the parent company and it has A, B, C, D are the subsidiary companies, right? There are different subsidiary companies. These are all legal entities. X Limited is a legal entity, A is legal entity, B is a legal entity, right? These are all the legal entities. Now, any transactions happens between A and B, B and C, C and D, or B and D, or A and D, between these, legal entities, they are the trading partners with each other. They are the trading partners with each other. For example, if A has trading activities with B, in A books, B will become trading partner B. In B books, trading partner A. Similar way, if there are transactions happen between B and C, in B books, it will treat trading partner C, and C books, it treats B entity as trading partner B. That's all. Whenever you see the trading activities between these subsidiaries and parents, and those entities will treat them as trading partners with each other. Very simple. There is no need to further complicate this topic, right? These are the trading partners. Let us talk about confirmation of balances. What do you mean by confirmation of balances? What is this confirmation of balances? This is applicable even in regular, our day-to-day customer related balances as well. For example, if I have a customer base of 1,000 and every year or every half year or every quarter, what generally people do is they will send their customer account statements to the customer and say, hey customer, this is the balance in my books, this is the amount you are supposed to pay me, can you please confirm? Right? Companies will send the statement of accounts to each customers. Similar way, suppliers will send statement of accounts to us asking us to confirm the balances. This is just a mere reconciliation between suppliers and customers to make sure that both the book balances in our books and their books balance should match. So just to make sure that the balances are matching, they will send the statements to each other, do the reconciliation and ensure that balances are being matched. Similar way in intercompany also, what these trading partners are legal entities. Henceforth, let me talk, use trading partners as a word. So what these trading partners do is, they will send balances to the respective counterparts, trading partners, and asking them to confirm the balances. How that happens? In general, what will happen? Big companies, they will have a tool. Big companies, they will have a tool. The tool is called confirmation balancing tool. So there, what will happen? All suppose there are A, B, C, D legal entities, right? Let us say there are transactions happened between A and B. A sold goods to B. So what will happen? I'm just taking this between transactions between A and B only. Let us say A sold goods to B. So what entry B A will write? B account they will debit and revenue account they credit. Similar way, what B does? Purchase account it will debit and credit A account. So here in A books, B is in receivable position. In B books, A is in payable position. This is very important. In general, what will happen? Receivable transactions will be uploaded into the tool where the confirmation balance tool is available. If there is no tool available, then they will send the statement. Receivable person will send the statement to the payable person. So here, who is A is in receivable position from B. A is in receivable position from B. So what A does, A will take extract the statement and he will send the statement to B, asking them to confirm the balances. I just took one example here. Don't think that there will be one transaction, there will be several transactions. So what we need to do is, so all those transactions will be extracted in the statement, receivable statement, and that statement will be sent to B and requesting him to do the reconciliation and confirm back. Right. Why this has to be done is, suppose there are 10 transactions in A books between A and B as a receivable. In B books, when we look at, there are only 7 transactions recorded. So there is a difference of 3 transactions between these 2 statements. What is this 3? A would have recorded these 3 as sales to B. B wouldn't have recorded. There could be 100 reasons for that. B wouldn't have received those goods, or those goods would have been received and returned back to A. Those goods might be in transit. There could be any reason why B wouldn't have recorded these 3 transactions. Then what will happen? Someone has to book an accrual, right? So then negotiations happens between A and B. A will go to B and say, see, as per my statement, there are transactions accounted, but in your books, you recorded only 7. These 3 transactions I already sold, but you did not record. Can you please book an accrual for this? If B agrees to that, by end of the month I'm talking, this is not on daily basis activity. This confirmation of balances happens at the end of the month. So end of the month, what will happen? B should agree for these 3. If B agrees, what he can do, he can book an accrual for these 3 transactions. So that here 10 transactions, here 10 transactions will get matched. Suppose B says, no, sorry, I don't accept. These 3 transactions I have not received. I'm not ready to book an accrual. Right? Then if B says, no, I'm not ready to accept these 3 transactions, then A has to reverse these transactions. That means what? He has to book a reversal accrual in his books of accounts to match these 2. Then you can say, he already sold, no, why is he reversing those 3 transactions? For time being, he will reverse till month end close. Once the month end close activities are completed, again the negotiations will start. This accrual will get reversed, and again they will do negotiations between A and B and make sure that these 3 transactions are recorded in B books, or otherwise the issue has been resolved. Something they need to work upon. So, why confirmation of balance is required? Confirmation of balance is required to make sure that whatever transactions recorded in one trading partner are recorded in other trading partner, to make sure that both the balances are matching. If the balances are not matching, we need to make sure that we book the accruals to match those transactions by end of the month. So this is very, very important. So every intercompany trading partners, what they do, they will extract the total trading partners list and see the balances, and they will send their statements to the respective trading partners requesting them to confirm the balances. This can be done by sending physical statements to the trading partners, or there could be a tool wherein they will upload the balances, and the other trading partners, they have to go to the tool and confirm, saying that I agree to the balances. Wherever they disagree, they can say I disagree and put the comment saying that I disagree to this balance. Then this is the difference. So it can happen by, if there is a tool available, it can happen through tool, or if there is no tool available, then physical statements will be sent and confirmations will be taken from the people. This is how the confirmation of balances happens. Confirmation of balances is very, very important in intercompany. Every month before month end close, you need to start working upon this confirmation of balances. Clear? Right. Next one is intercompany settlements. What do you mean by intercompany settlements? Intercompany settlements are basically settling the transactions between A and B. For example, I say let us take the same transaction. A sold goods to B, right? Now he would have debited B and created revenue. B would have debited purchases and created A. That means what? A has to receive this amount from B. B has to pay this amount to A. How the settlement happens? This settlement can happen through netting tool, or the settlement can happen as the way we settle the payments to the suppliers, outside suppliers. Similar way the settlement can happen. If the settlement happens the way it happens to the third party suppliers, then what will happen? All these payments will be picked up in our AP proposal and settlements will happen and transactions will be recorded as the way we record the transactions in payable books, right? But if there is a netting tool, then the settlement will happen differently. What will happen in netting tool? For following netting tool, what I observed in my experience is they should have a similar ERP across all the trading partners. If there is a similar software, then it will be easy. Otherwise, if they have a different legacy softwares being followed by each trading partner, it will be difficult to have a settlement, right? Because if SAP, let us take an SAP. If SAP is being followed across all the trading partners, there is no issue. You can create one in-house bank account or cash pool account and settlement happen through that. So that is called a netting tool. So it will happen through in-house banking. If that facility is not available, the settlements happens as I told you previously, the way we do the settlements to the third party suppliers, similar way intercompany settlement also happens. So I'm not talking about the way it happens for the third party suppliers, because we all know how the payments will be picked up in the payment proposal and the payment will go to the, I explained this in my bank account and clearing account video. You can refer that video. But here in netting tool, what will happen? We create one in-house bank or cash pool account. Cash pool account or in-house bank. Then what will happen? A is supposed to receive this from B. So what did he write? B account debit to revenue account. That is the entry return. Now he has to receive the amount. What he will do is B will settle through in-house bank. Then what will happen? A will write an entry. So in-house bank account debit to B account. It will go to in-house bank. It is a cash pool account. Similar way, what B will do is B will debit A account and credit in-house bank account. Everything will be settled through in-house bank. See, if you see in-house bank, I'm debiting and I'm creating an in-house bank. Why this happens is this is an elimination entry again. There is no need to do the settlements between these two, because anyway consolidation level there is no impact here, because one entity it is showing as receivable, other entity it is showing as payable. When I prepare the consolidated P&L and balance sheet, it will not have any impact. So that is the reason what will happen. All these settlements will be routed through netting tool, wherein they create one in-house bank account or cash pool account. So all payments and receipts will be routed through this in-house banking with these kind of journal entries, and settlements will be done in the tool. Clear? So this is how the intercompany settlements will be done. I hope you understood the concept. If you like the concept, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Thank you.